Hey guys, wonderful day again today, and this video I am gonna cover Zepto's going public plans. And this is one company that I would be more actively tracking in the quarters to come. They've not gone public yet, they will go public soon enough, but then they've had very strong ambitions to go public in the last 1 year. They had initial ambitions of going public sometime in April this year, but for whatever reason, their fundamentals were not strong. They've had a couple of controversies to compile with their ambition of going public. Some of those controversies I could mention, which is they have had some dark pricing pattern related stuff, which consumers felt that they were being robbed off by using their application. Some of their top C-suite executives in the CXO level, they've all quit the company. They've gotten rid of about 500 employees in their company. So through all of this, I'm trying to understand why are they still going public even after all of this controversy. And they've only started operations in 2021, which is much more recent compared to a company like Zomato or Zomato Blinkit or Swiggy Instamart. So they're number three in the quick commerce space, and they're much more recent. They've come in the market with a very strong moat and a very strong motive by saying we are here to promise 10-minute deliveries and we'll do anything possible to make that happen. So what really goes behind the quick commerce space is the presence of dark stores. And if you have lived in major cities in India, which is Delhi, Bangalore, Hyderabad, Chennai for that matter, you notice that there are dark stores located very strategically across the city, in a way where the gig workers who are using the delivery app, which is either Blinkit or Swiggy Instamart or Zepto, they would go to these dark stores, take those provisions, and then deliver it to the consumer who's ordered from Zepto in the first place. Now, if you notice, Swiggy and Blinkit have they've got huge numbers of dark stores located strategically across the country and across major cities in India. But then Zepto doesn't have as many dark stores. They do have dark stores, but not as many dark stores in India. So you are essentially, located in a very tight space. Quick commerce has already been, uh, the demand for quick commerce has already moved towards Swiggy, Instamart, and Blinkit. So to try to fit yourself into this business and remain competitive and relevant, you need to build your business and diversify into more lucrative businesses. So they've done that by going into Zepto Cafe, which is a first mover. They've had that first mover advantage by going into Zepto Cafe, but then uh, you know Blinkit Bistro and then Swiggy Instamart's equivalent of Swiggy Bistro, they've also come into the space and they've not been able to, remain competitive in the cafe related area. So they have had to get rid of that business, and then they had to pivot into other businesses like Zepto Pharmacy and Zepto Atom. Now, I'm not sure how a company that is number three in the space would still continue to remain relevant. They still have to do a lot of work, but to see the ambition that they want to remain public, remain relevant, is really inspiring for me. And another point to mention is that they've raised $450 million in the last 1 year in a Series F funding. Now, what's very intriguing for me is the source of this funding. It's coming from California Public Employees Retirement System. So if you notice, this is a pension fund located in the US, that too in California. So that's the most interesting thing about this company is they've raised $450 million in a Series F funding from a pension fund in the US, which is very interesting to me because they've not been able to raise any of that kind of money across India, and they've raised that kind of money from a private debt market in the US, which is interesting to me because that raises very interesting concerns, not concerns, very interesting questions, which is to say that private debt market in India is not as good. Mature markets like US are capable of having such strong debt markets. So to see a pension fund, a public pension fund, sorry, I'm very sorry for that, a large public pension fund located in the US to invest in a third biggest quick commerce brand in India is very interesting to me. But that also shows that they want to quickly liquidate their assets. They see a lot of promise in Zepto's fundamentals, and they just want to make sure that they could make a quick buck. Go public, motivate the company to go public as quickly as possible, and say, hey, listen, we want to get that money back, probably double our investment. Their initial investment of $450 million could get liquidated into much more, like $900 million. They could quickly liquidate themselves and move out. That's what promoters do in IPOs these days, right? They quickly want to liquidate themselves from a company going public and make a quick buck out of it. So that's what I see in a public pension fund from the US trying to invest in a private debt market in India, which is, for me, it's very interesting as a person researching IPOs and researching private debt markets in India. The catch over here is, through all of this, if you notice, Zepto is heavily dependent on remaining relevant in the space as the third biggest player and relevant in the gig workers, relevant among gig workers. They have to incentivize gig workers, mostly coming from tier 3 cities in India, to work for Zepto and not for Swiggy or Blinkit. They have to incentivize them to continue working for Zepto and say, hey, listen, we can incentivize you to give you better margins per delivery, right? I remember asking these delivery boys once that, per delivery, they get a percentage cut. So they have to incentivize these delivery boys for a better margin. And they also have to incentivize the consumers using their application to they've gotten rid of search fees, handling fees, and delivery fees. So they're incentivizing even the consumers, and they're doubly incentivizing even the gig workers to continue working for them. It's very hard to continue remaining relevant in this space when you're having huge players like Jio, like Reliance has just picked up pace and come into the quick commerce space. And the last time you've noticed something like this happen, which is Mukesh Ambani entered the Indian telecom space. And the last time they've done it, they've absolutely decimated all their competition. There was Vodafone, there was Tata Docomo, there was Idea, there were all these different brands. But Mukesh Ambani's Jio came in and then absolutely decimated all the competition. And right now we've just had two players, which is Bharti Airtel and this one, Jio, to continue remaining relevant in this space. So for me, it's very interesting because it's very hard, in my opinion, that Zepto will continue remaining relevant. But I'm still bullish on this. If they're coming in an IPO, I would still consider investing in them just because of their ambition and the fact that they've been able to raise such kind of money previously, just to show that they are continuing to remain relevant by keeping their fundamentals intact and perhaps even remaining profitable. They mentioned they've been profitable for the last couple of quarters, scaling at 20 to 25%. So yeah, that's what I'm looking for. And probably I'll continue with my hot take by saying you should probably continue using Zepto. Until next time.